is good. So if you hear background noise, I have some kids, so don't have to deal with it. Anyways, so I'm gonna break down this trade from the let me move this fundamentals um to the actual breakdown of the trade. Let me find where I dropped those screenshots real quick. Or actually I can just go to my Google Drive, it's even better, and show you the article. And this is going to be a little bit more of a detailed breakdown because of the simple fact that the fundamentals on this were so nice. And I will be teaching a section on this, which it's honestly the most important skill in trading, other than technical analysis, is being able to analyze the actual economy of um, the pairs that you're trading, because that's literally how professionals um, do market analysis for real. And I started to do this honestly about a year and a half ago. I was put on game by my prime market terminal people. I was just doing technical analysis. I was winning a pretty good amount of the time, but not enough. I started to get stuff out a lot more when the world changed, and basically it caught up to me. Which just a little kind of preview would go away, but whatever. What can you do? Let me see if I can make that go away. Heck no. Okay, whatever. A little annoying, but that's fine. Is this it? Yes, it is. Good stuff. Okay. So we have this to open real quick, and I will find the table of contents real quick and go to New Zealand dollar. So whenever you're kind of trading at all, you are trading comparing one country to another. I'm gonna be slow today. You're comparing one country to another in terms of their economy. You know what I mean? If one country is in inflation, in inflation or recession, whatever, I just find it. Then and the other country is not, then that's going to weigh on the pair. So you're literally comparing. Think of it as like Mortal Kombat. You know what I mean? If the U.S. dollar or the Australian dollar with fighting the New Zealand dollar, and New Zealand dollar had all this baggage, basically making it weaker. That would be kind of like an example of this is a Great British pound. I know the New Zealand dollar is here. I don't know why the table of contents wasn't working. Usually, if you click on the thing, it'll scroll all the way down for you to where you need to be, which makes it easier. But I guess not today. Did I pass it already? Oh, I passed it already. Give me a second here. Okay. Click thingy. Then it's at 11. Let me see if I have 11. Go a little slower, maybe. All heavy Great British pound stuff. I'm gonna have to read that too in preparation for the next week. Because I just read the New Zealand dollar stuff, because that's what I was kind of looking at, analyzing their economy. And this is via Morgan Stanley, very reputable bank. Norwegian. Very reputable. Their opinions matter. Australia. You can also read about the Australian dollar in comparison. Um, so China reopening on the Australian dollar would boost rates a little bit, because Australia goes off of China. It's completely effective. If China's having a bad time with Australia, they have some good moves. Their current deficit has shifted to a surplus, because they're mainly an export country. So and export and metals have picked up. So that's a little bit of a good news for the Australian dollar. Um, but it seems as if the New Zealand dollar is here. This is doing better. Okay. So central bank's divergence to put downward pressure on the AUDNZD, which triggered me to actually even just look at AUDNZD at all for a short. A lot of times central banks they'll mention what they're looking at, opinions on things, and then you look at the data, you go look at the trend, all of that, and look at these economic fundamentals on the New Zealand dollar, which is the non-dominant currency, right? Because you're comparing the Australian dollar to the New Zealand dollar. Um, that Basically they expect them to keep on hiking inflation hiking up rates to fight combat inflation because they're battling inflation, which is a bad thing. So I was thinking something short term or medium term for New Zealand dollar um, being kind of in the green for now. Tightly run market should keep New Zealand dollar yields elevated. If you don't know what yields are, like I said, I'll teach a class on all of that. It's going to be extremely extensive because of the amount of things and reports and pieces of economic information that need to be learned and what they do and how they affect the currency and things like that. Um, that's going to be really, really important. So they show you that this is putting downward pressure on AUDNZD. So Australia is doing decent for the China reopening, but they're also being plagued by the China COVID situation where they have officially come back to the pre-pandemic levels or the pandemic levels. They're actually worse than the pandemic levels in terms of their COVID spread right now. So AUDNZD, they're being plagued by that. Like I said, China's economy completely is directly proportionate to Australia's economy. Whatever happens in China, which is a bigger economy, obviously it gets affected. Australia gets affected and stuff like that. So New Zealand's current account deficit, as in like their actual account, has begun to widen, as in they are kind of going into the positive because dividend payments are resuming and imports have picked up. They do import like steel and a few. Well, if they import a few things. I can't remember what they import, but there's really no need for the things that they import, to be honest. That's why I think that New Zealand is going to have a very kind of slow recovery and then continue into bad news for themselves. NZD USD, for example, remains highly sensitive to global risk demands. NZD USD is buying as has picked up meaningfully in London and New York as Asia time zones in recent weeks because New Zealand dollar is doing better than the US dollar right now. US dollar is getting ready to go into recession. They have all this positive news about New Zealand. We're buying the New Zealand dollar in comparison to the US dollar. Same thing with the other trade that I'm actually getting ready to break down. Australian dollar, New Zealand dollar. We are right now New Zealand is doing better than Australia. So New Zealand being the most non-dominant currency, you're going to sell the Australian dollar in comparison to the New Zealand dollar via fundamentals. New Zealand dollar is the largest tactical long position. So once again, supporting anything New Zealand dollar dominant like NZD, USD, NZD CAD, that's all to be longs. They're comparing for the week for right now, right? You have to keep on reading these reports to see if they still think the same thing week by week. But these are top central banks in the world, top investors in the world, the big players, if you will, and they are going to be their opinion is going to weigh. They have to have data, right? And is the largest tactical long position in the D10, heading into the RBNZ meeting, but positioning is not extreme yet. The CTN is also marginally bullish on New Zealand dollar, right? The rise of New Zealand dollar and nominal yields have driven by break-evens as real yields have fallen. So this is all like pretty good news for the New Zealand dollar for now. You have markets are pricing in terminal rate of around 5% above the New Zealand dollar's estimate of neutral, which is the highest in the G10, right? The USD is slightly undervalued at around 0.061. So they give you levels to mention too, and you can use that as a reference. Though rates should continue to move higher as the RBNZD hikes there. So they're saying that right now, the New Zealand dollar is bullish, but in comparison to its peers, so you NZD, USD combined, the CAD, and if you look, most people are selling those pairs right now with retailers, right? They do think that the rate hikes in order to combat inflation is going to bring the New Zealand dollar down at some point, right? So good news for both countries, but overall, you had way better news and more consistent news with the New Zealand dollar, right? And like economic positioning, pretty much, they're doing well. They're starting to recover. The only thing that they really have to fight is inflation, and that's going to obviously weigh on them. But for now, they're doing very well. So I looked at AUDNZD, and I went to the chart to break it down. And this is the trade that I did take literally this morning at like 2 o'clock in the morning on Thanksgiving, right? And after I read that the other day, and I was like, bet. And the rest was history. Let me see. What's this based off of? 4 hour daily. What's the daily? A lot of my trades are based off the daily because it's the high, high time frame that I'll go up. Sometimes I'll look at the weekly and monthly just to kind of have some confluence. But we had something out here first. We had this big daily bearish change and shift. You can see that since Wednesday, September 21st, New Zealand dollar was, or Australian dollar was buying in comparison to New Zealand dollar. This is when they were doing really bad. Um, really since zoom out even further, which counts since February 26th of 2020, the Zealand dollar economy was doing bad. This was during COVID and all that, and then everything started to recover around the 22nd of September, and you could have caught a big swing right here. If you read about your fundamentals, so they're basically chasing all this liquidity, right here on these lower highs. So all this liquidity right here on this big bullish trend is going to be external liquidity. So from a higher time frame point of view, you can see that, and you can see that they've been chasing that. So I did notice there was a recent break of structure right here on the daily. And if you remember the scaling video, every time there's a break of structure on any time frame, price tends to because this is like discount premium territory, right? Once again, just like the other day, price tends to come back up into premium territory and then fill some type of institutional footprint in order to have a continuation. Typically, it comes back up to the order block that was respected, which would be this one. Boom, respected, continuation, break of structure. Technically, this bullish candle was the one responsible, but this is the kind of general area that the banks wanted to sell from at that time. So a lot of the times they'll come back to the area right here, and I'll expect them to, but fair value gaps and things are a thing too. So I had a recent break of structure right here, and basically I did not think this big impulse move was done. But I did see a reaction to this bearish order block. So they created a bearish order block supply in order to post a continuation in order to keep going down. Basically, the retracement was not back up, was not going to start happening yet. They had some more liquidity to take on the downside on the daily. So I drew that in, and I did notice this reaction right here to it on this candle. So I was like, bet, drop down to the 4 hour and looked down to the 4 hour. I did notice that on the 4 hour, there was this order block right here that was respected. Liquidity was taken and traded above all of these candles right here. And a red continuation, which broke structure right here where my crosshairs are. And I knew at that point they really didn't have a reason to come back up here. It wasn't very likely since they already took liquidity, mitigated the order block, and then it dropped from there. So I noticed this other order block as well that caused the structure break right here, which would be on this candle right here from a 4H point of view. And price was at the time inside of that candle, mitigating that on this bullish candle, I believe it was. And I was like, bet, we're going to see if you either continue back up to here in order to basically retest this order block or not, or are you going to, like I suspect, basically go up here, mitigate this order block, and have a continuation. It's going to be one of the two scenarios and closes. It's going to be one of the two scenarios no matter what. So you have to kind of like wait and react to price and what it's doing on the 4H, specifically. A lot of people have rules where they'll like go down to the 1H and then, or they'll watch the 4H and then wait for our bearish engulfing close, wait for it to take liquidity first, and then go down to the 15-minute and then try to enter there at that time in order to kind of wait for a more higher time frame price action. That's what I like to do. But I've gotten to a point of like the actual, it's a 15 minutes going to be dropping as a result of the H4, right? It's going to be, the price is going to start and stop right in the proper places where liquidity is taken and then start to resume the trend, based on the 4 hour price action. So once I saw that, I was like, bet either the 15 minutes going to continue to have breaks the structure to the upside until all the liquidity is taken if it's coming all the way up here, or it's gonna create a high and then fail to create a high right here, and then change character and then fail to create a high again and then break structure and then come back to the point of origin in order to have a continuation, right? And then I would have drawn a Fibonacci, like let's just say right here, right? I would have drawn my order block right here, and I would have expected it to come back up, clear some liquidity, and then have a continuation, right? That's if it failed to make a new high after this higher high, right? It broke structure last right here, then break structure, still didn't create a low, because this is a higher low, technically speaking. We're thinking this basic structure. Then create a new high, created a low, lower high, liquidity take continuation, right? This is all the confirmations I need right here on this leg down. So I ended up going as the hourly, right after that, just kind of take a peek and kind of see how the actual candles broke down. And then on top of the fact that this was also in premium territory, right? I drew my fib right here. And I looked and I was like, bet, let me see here. And I was like, it's possible that price could come back up and basically wake up and touch this and go back down. But I knew it was selling from one of these footprints. So I looked at the H1 of how the kind of like the candles were breaking down. Remember that anything that's a lower high to the point of origin is going to be taken, right? So I looked at that and was like, bet it broke down pretty nicely, dropped down to the 15-minute, and I did see, and I can delete this. You can see that I'm just actually drew this premium discount fib on the 15-minute. I did look to see that the 4-hour time frame, right? This big impulse move right here caused a big impulse move here, right? You had a change of character, and then you had them take an entire impulse leg at that time, right? So I did draw in liquidity there. Price took that liquidity, broke structure right here. You can't barely see it, but it's a change of character right here. Basically a higher high, higher low, right? This is a higher low, and then a higher high, and then boom, failed to low and failed to make it a new high a bunch of times, basically continuing the bearish trend. So you're always analyzing the impulse move to the left of you, right? So some advice I can give you for making sure that you have the right zones is just to look left, right? Where's the last time it broke structure, changed trends completely, changed character, etc., right? Prior to this big move, it was right here. It came up, took liquidity, mitigated its order block in premium territory, which I'll move this just to show you real quick. At the time, right, you can see that it's the same thing, change character right here, broke structure, etc., where my crosshairs are, and then failed to create a new high a bunch of times, basically chasing the proper liquidity, but then price came right back up and basically mitigated this order block right here in premium territory, right, perfectly, the go crackhead, in premium territory, right? So that's kind of what I look for at literally every time. It's the same thing for buys, but just opposite. Look for impulse moves up and analyze that, right? So it's pretty close to TP. I thought about getting a second entry, but I was like, at Thanksgiving, I don't want to be greedy. Market volatilities are supposed to be pretty slow. And I also, with that said, caught GN too. It was in a little bit of drawdown, but not much. So basically, I was looking for the same thing to repeat as right here, right? Price came down, and I saw that all the liquidity built, so I knew it was taking out all of this. As you can see right here, I have put that right there up to the point of where it was going, and also put the liquidity on all the higher lows right here. And I drew kind of like a trend line. It's kind of like my favorite way to draw liquidity, to be honest, because it does take liquidity away and turn on external liquidity that is covered in the education. Price came up, mitigated this, dropped, um, changed characters, technically speaking, right here. And traded below, or my bad, it created a higher low right here. So it's still in kind of like a bullish structure. So I didn't really pay attention to it. As long as it's in a bullish structure and not taking bearish liquidity, I'm not going to be paying attention to it, right? I was looking to see basically after this high was established, is it going to break structure to the upside and create a new high, still chasing liquidity to the upside? It did not. It formed a lower high, came down, took the liquidity there, but still did not clear this high right here. And then had a continuation. I did put a market execution. I believe here we had about a 0.5% drawdown or so. And then it dropped into profit. Like I said, you're not here to be a perfect trader. You're here to be an effective trader. The entry was like, I was to give it a B minus, to be honest. I did set a limit order, but you can't be perfect. It did come back up to the original candle that broke the high, but I did want to wait on this one because I was like, I don't want it to spike up on me. My stop loss is just going to be just behind here. So if it spikes up even a little bit to tap me out. So almost did, but then didn't. Dropped in the profit 1 to 4. Pretty easy stuff. I'm kind of trying to optimize having tighter stop losses and more sniper entries. So kind of in an experimentation phase right now. To kind of test a little bit. But yeah, this is a 1 to 4, very beautiful trade. The confluence was there for me to take it, and some New Zealand dollar or some profits from the holidays, right? In London session. This sucker plays too much, but she dropped in a profit nicely. Okay. Same thing. New Zealand dollars doing well for now via the fundamentals here. Drops to the bottom. New Zealand dollars are doing well versus the fundamentals. The Great British Pound is doing terrible and has been for quite some time. It's the same thing here. I looked on the H4 from the daily down, and then I used, this was all H4 stuff. Sometimes it'd be like that where you just use H4 stuff. No, was that a daily imbalance? Sure was. There's a daily imbalance right here between this candle and then this candle. I drew that in. Expected it to be filled in a continuation from that. Just because there was an impulse move right here. I did not rule out the possibility of it coming back up to this order block because it's in premium territory. So I thought about that and I waited for an actual reaction to the actual order block in here. And as you can see, the inside of the imbalance, right? I looked inside of the imbalance. I looked inside of the imbalance and I can take care of that later. Basically had the H4 as a result of the daily broke structure right here. You can see a completely changed character. So I knew that this was the impulse move, right? That I was going to be going based off of all of the liquidity right here is going to be taken. So you can see right here on this wick, price traded above, took that liquidity perfectly into the equilibrium of the fair value gap, basically. And I knew that was going to be the one I was going to be working with, but because this impulse move didn't happen quite yet, not all the way, it did break structure basically right here where my crosshairs are and completely start chasing opposite liquidity. So I knew since they took the liquidity here already and had a continuation, it wasn't very likely that they were going to come back up to this area because once banks are done with an area, they're done with an area. Right, price came up, impulse moved down, and took liquidity here, rejection. This was off of the H4 order block right here, by the way, the one that took liquidity and then caused the structure break and things like that. It took liquidity here, mitigated the order block, dropped, broke structure, came up, took liquidity again here, dropped, broke structure again, came up, took liquidity again, and kept rejecting the same order block basically. So after that, I was like, bet that's my H4 order block has just been respected. I dropped down to the H1, and the H1 had an order block right here, right? And you don't have to do your stuff like this. It's just how I like to do it. I like to just make sure, put down the time frames and make sure I look at what impulse move am I analyzing on that time frame. You know, is there any point of interest that I can use currently in order to actually get into that trade on lower time frames than the daily and the 4 hour, right? Sometimes it's just the 4 hour. Sometimes it's the daily down to the 4 hour and then the 4 hour down to the hourly, and then I drop to the 15-minute, right? You can see that where liquidity was taken, mitigation, drop, liquidity taken, mitigation, drop, and I used this up candle, this last up candle right here before the drop. This did break structure where big time, where crosshairs are right now, and also did it again right here. So I went down to the 15-minute, kind of anticipating, looking to see how that worked out, and you can see that if I drew, because where liquidity is already taken, I don't even count those areas because there's a very high chance that the banks don't really care about that area anymore. Liquidity was taken to the upside. Price dropped. This is my new impulse move right here to analyze. Liquidity was taken to the upside. Again, price started to drop. And then this is kind of where I saw the trend, right? This is where I saw where I wanted to get in, right? Is this little area here from basically this last liquidity take onto the right. I had this kind of 15-minute order block right here that I drew in. That was the cause of a break of structure, a double break of structure basically. And also we had a character change right here. I did see that there was some liquidity right here that got taken actually. And the price came up and mitigated this right here. Where is it at? Price came up and I knew it was going to be chasing all the liquidity on this impulse move. So I did draw it in like this just because I got to cover all of the wicks. And as price kind of like moves, you're gonna react to it. You're gonna adjust your liquidity is right because this broke structure here via this wick right here, broke structure. So I knew they're still chasing it. That's a sign. Came down, did not create a higher low right here, basically. I mean, it did create a higher low, broke structure again, and then came down. So I did do a and was it a limit order if I remember right? Pretty sure it was a limit order. Might have been market execution. I can't remember. I believe on one of these wicked out candles, Price did come back up a little bit. We had about 1/4% drawdown, 0.5% drawdown, and then price tanked, right? And I do expect it tanked and broke structure right here on these wicks right here. So that's a sign that they are actually done with this area. Because if you can see right here, right, if you notice something, price never trades below a wick like that. You can see on this wick, it created a higher low. From here to here, create a hollow, and then suddenly, boom, they're done with the area. They change character right here, they break structure, and then they don't want anything to do with that area anymore. And it shows you that they're moving on, right? They're moving on to actually chase sellers now. People, they'll set, if you remember it this way, it's sell stops. It doesn't really matter how you think of it. I do say internal and external liquidity works differently than buy stops, sell stops. This was a pretty structure right here. It does work a little bit differently, as I explained. Say broke structure right here is just that last higher low, and now I'm expecting the price to come back up potentially one more time to this area, and then fail to make a new high several times. This is scalable, but I'm not going to be scaling this. This is just some extra Thanksgiving profits, basically. I don't plan on this being in this tomorrow. Even if market volatility is slow and I only get halfway to my TP, I'll take my 2 or 3% from this trade and call it a week, honestly, because I would have closed like 11% today. And basically what I do is I'll match up order blocks with liquidity, and I'll follow the liquidity. What's price currently chasing and what does it need to chase in order for me to actually want to get into the trade, right? If it's chasing, I'm looking to sell and it's chasing buy side, buy stops above or external liquidity above, I'm not going to want to get in if it keeps breaking structure to the upside, because I know they're not done yet. But as soon as it changes character and breaks structure and starts to show you that it's chasing the opposite liquidity, then that's when you kind of want to start to get in, right? And look for a retest of the order block in premium territory, right? That's on your entry time frame. So I did draw that in at the time, and I'll fix this in a moment. From here to here, via this impulse move right here, all right? And I did notice that this was also an order block in premium territory right here. So there's confluence there. Equilibrium, and then the other two sides of the order block, which are called frontal and distal parts of the order block. So I typically do aggressive entries. I have noticed that equilibrium has been a thing lately. More often than not, I don't mind taking like a 0.5% drawdown in order to kind of be in profit, or 1/4% drawdown. I always have perfect entries because you're a human being, but nonetheless, this was a great opportunity to short anything paired with the New Zealand dollar that's non-dominant, because the New Zealand dollar for now is doing well, right? I do expect that to change, but for now, these reports are telling me that the New Zealand dollar is doing well compared to pretty much everybody else. I'm going to look to sell ENGN, AUDNZD, because an institution that was like, hey, this is going to make AUDNZD falls. Like, then we look at the data, and the rest is history, right? So you might as well be right multiple times, with the confluence from the fundamentals, right? This is how you kind of analyze charts from kind of start to finish professionally, right? Now, normally I would have put together like a PDF of all of the fundamentals, the chart, everything from the daily down, took in pictures, wrote notes about them, and created a whole PDF, but I didn't because it was just a Thanksgiving trade. But going into 2023, my goal is just to document all of my trades from the fundamentals and everything else. So if you have any questions about this breakdown, drop them in a questions chat on any of these trades. And it's kind of like a Thanksgiving gift to you guys. I'm kind of showing you where my thought process was on both of these trades and the fundamentals behind them. Also, yeah, kid. Also, good thing I'm finishing up. It failed to make it. Bria, can you go get him? Also, they failed to make a new high several times. Right here, boom, this was the area that I was kind of looking to see if it was going to trade above, basically right here, and go into this order block instead again, where it mitigated here. It failed to make a new high right here, technically speaking, relative to this wick. Failed to make a new high. It's showing you that they're actually changing to a bearish structure, and that was my key to be able to pretty much get in this area. So, like I said, if you have any questions about this breakdown, go and let me know and drop it in the questions chat, and happy holidays.